Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from Denver, Colorado. A little overcast out here in Denver this morning. And on this fine Monday, pleased to be joined. Schwab's regional investment strategist, Rachel Deshelle, is here. Hey, Rachel, it's great to see you this Monday. How are you?
Great to see you as well. Good morning. I am doing great. How are you doing?
I am getting caught up with the very busy weekend spent at Red Rocks and a little blurry to start my Monday, but we are happy to be here nonetheless. We've got plenty to get to. Rachel, we have more bullishness in this market, wants to apparently continue higher. So we're going to look at a bunch of charts with everybody as we always do on a Monday. So thanks to all of you for being here. Of course, I see a ton of familiar names already. One of those is our man Mike Fairborn here in the chat. Say hey to Mike. He'll keep an eye on questions and comments for us here or there in the chat. Specifically, Rachel and I will work to bring those comments and questions to our discussion as well. We do want to hear from you. So please feel free to post for the duration of our show. We'll go about 45 minutes in total. As usual, if you're not already doing so, you can follow Mike and me on X at Mike Fairborn CS, at Kevin Horner CS. We will post for you there throughout the week. Try to give you some ideas of some charts to pay attention to, other notable market pieces, data notes, etc. So a good way to get with us outside of the classes that we host for you here on the channel. Now let's get to our disclosures, everybody, and then we will get into charts and review of the market. So please remember that our discussion here is fully informational and educational. We do not make recommendations nor endorsements for a specific approach to trading the market. We do, however, talk technical analysis quite a bit. It's important, though, to remember, regardless, that technical analysis, while we cover that here quite frequently, is not to be used exclusively on its own for all decision making. We do think it can be a component of your process, everybody. But please think of it as that, just a piece of your overall puzzle. So with that, let's go ahead and push on through here. We would be showing an agenda slide. Again, I'm not entirely certain why I'm not getting this visibly available to you all, but as a reminder of our agenda, we do a top-down approach here, everybody. We're going to start with our major indices. We're going to look at the S&P 500, the NASDAQ 100, the Russell 2000, and then we're going to look at some sectors. We've definitely got some stocks in the news this morning for notable reasons, a couple of upgrades, and some intriguing charts to pay attention to as always. So with that, Rachel, let's see if I can get some share detail here on my screen that actually lines up, because now I'm concerned that if I can't show you my slides, that maybe my charts aren't showing. So give me a quick second here. I'm going to do a reset of my search, and we're going to try and do this one more time and see if I can't show everything for you, everybody. All right.
All good, Evan. It's a Red Rocks morning, so.
That's funny that that actually fits quite well within the grand scheme of things. If my platform feels like I have been feeling this weekend, I would understand it. So I am sharing here. Looks like we should be good to go. There's our SPX, everybody. Thank you all for your patience. I certainly appreciate it. So Rachel, we're looking at the SPX, and the move that's obvious here, I think, is the one that had us really just breaking out on last week here. We have created a potential new level of short-term support for us here on the SPX. What are you paying attention to closely?
Definitely. And that's the level that I'm looking at as well as shorter-term support. And I mean, the most notable thing is last week we continued to make new all-time highs. And we're doing the same thing with the open this morning. Again, making new all-time highs. We're even possibly seeing a golden cross taking place with the 50 crossing above the 200 period moving average. We are seeing RSI with momentum reaching those overbought levels, really confirming that move in the trend. Mm-hmm. So really all the bullish evidence is really stacking up here. With a weight of the evidence, I really don't see anything bearish on this chart, to be honest with you. But for those that are looking for that level of support, that 60-55, that gap from last week will definitely act as that short term.
Yeah, obviously nobody likes to find us 150 points down pretty quickly. That's where support would reside, and yet As everybody who watches this show frequently knows, we're going to talk about those lower levels with intention. We try to bring those levels to the table because we want you to be thinking about how will you feel about your portfolio if we reside at that spot? What kind of steps can you take to manage that type of pullback? If you're invested to a comfortable level, a pullback like that is possibly something you're not even going to take action on. We've been above the 20-day moving average 50 days in a row, 50 sessions in a row. You don't have a whole lot of reason to be defensive up here other than to capitalize perhaps on profits and returns that you might be looking at. And so no one would fault a trader, an investor for taking profits at upper levels like this. But if you're a trend trader, you're really watching that 20-day and you're looking for something different than what has gone on for the better part of the last 10 weeks now. So we often say it, we try not to fight against what we are seeing in terms of price action, regardless of how we feel. And Rachel, one of the things you and I talked about pre-show was the sentiment here. Overall sentiment amongst investors, traders, when you speak to people about the market, there still isn't a ton of comfort to be buying here, not a ton of comfort with the rally that we've even made. What can that tell us about our potential to keep pushing here?
Yeah, a great point to bring up, because I think we know as traders, and really the whole premise of technical analysis and why we look at charts, Kevin, is just because we know that price and sentiment just influence each other so much. So we know that fear and greed and all those emotions and things like that will drive movement in the market. And so all-time highs are not bearish, because I saw a question in the chat. They are not bearish, and they may actually start to shift sentiment even more because of that greed type of emotion or the FOMO, the fear of missing out. So price tends to drive sentiment in that way, where when people start to see us making new all-time highs, that may start to turn the sentiment from a little bit more neutral to bearish to a little bit more bullish as the evidence continues to build up. So that's just what I've seen. I don't know if you have a different take than that, but that cyclical relationship of price and sentiment is definitely something notable here.
I think so too. And again, we're not going to speak to the idea that everybody should be defensive at upper levels, but I do want to speak to the idea that everybody should know how they should be approaching things, how you individually feel about your portfolio, your amount of exposure to the market, the amount of money you have on the table, and how you're going to manage those trades along the way. That's what we want to cover here, of course, and we'll try to keep speaking to those ideas, give you some concepts that you can utilize in your process, fine-tune so that they meet your tolerance for risk and your approach to trading the market, a really thoughtful way of addressing the market day to day, or maybe even week to week, if that's how frequently you pay attention. So, and to answer Mike, no, consolidation is always a welcome scenario in the midst of an uptrend. Commonly, though, we get that consolidation in the form of, the way that things had gone for 2 weeks back here before we broke out, really just sideways and very limited give back. Ultimately, it just allows those rising moving averages to catch up with the current price action and give us new areas of potential support along the way. So I think we've got a pretty clear idea on the SPX, at least in terms of management, how we might like to go forward here in the near term. Let's see about the NDX here. We're going to find a lot of similarities, Rachel, because as I've been noting, we see both the SPX and the NDX breaking the 20-day way back here on April 23rd. So they both did it on the same day. Both are managing against the 20-day. Neither have had a close below the 20-day in 50 sessions. So we're seeing a lot of consistency broadly here. Can we take positivity from that viewpoint, Rachel?
I think we can take a lot of positivity from that, because we talk about, I know a few times I bring up like the Dow theory where the averages must confirm each other. And I know that kind of translates to different types of averages in today's market versus in the past. But something that we do want to see in bull markets is technology really leading the charge in that. And the fact that this NASDAQ 100 index is much more heavily weighted in technology than in the S&P 500. We saw that golden cross occur even before we were seeing it in the S&P 500 too. We're seeing the same type of confirmation and momentum. We're still seeing that strong breakout in trend. So really, I mean, the next level that we could look at for support is the one you've already drawn there, which is those previous all-time highs that if we possibly get a pullback or consolidation, I wouldn't be too surprised if price kind of pulls back to that level a little bit.
It makes a lot of sense. We frequently have noted in the last, I guess the last 3 months here that a lot of positions have been breakthrough resistance. And what do we get? We get a breakthrough. We get a little bit of a rally, maybe a week or longer. And then you get the throwback move to the breakout for a test of potential support. And that's ultimately what could happen here at the 22,200 zone potentially. By the time we see it, maybe the 20-day is caught up in there as well, providing more confluence. We always see that providing extra support, if you will, right? We see multiple data points at the same price levels, kind of strengthens that level from a standpoint of support. You can also note, Rachel, we see the RSI into overbought condition here. So we're validating this maneuver, right? I mean, the strength of this trend relative to price action of the last few months validates the new highs. So it's not as though we're seeing a really weak push here.
No, I mean, the most bullish thing the market can do is get overbought and stay that way. So, and we've seen those high levels of the RSI. It hasn't, like, even when we had those little pullbacks, those lows in the RSI in the last 2 months haven't even come close to the 50 level. So when we're looking for those more bullish environments, I know you and some of the other coaches will look for an RSI that's above that 50 level. And that's something we've seen, as well as hitting those overbought levels too. I saw a couple notes in the chat too, just about more of the chatter that's been taking place over the weekend, some of the tweets that have dropped. So maybe we speak to a little bit of that too for a moment.
Sure. Before we do, I had that technical difficulty right off the jump, and I just wanted to make sure that I'm getting all my P's and Q's covered here, everybody. So I'm going to bring us back real quickly to our disclosure slide so I can just highlight the conversation in our process as a reminder that we try to provide you with information and education here. We are not in the habit of predicting market movement in any way. What we try to do is remind you of the concepts and strategies relevant to technical analysis and things that you traders might bear in mind and keep with you as you move through your own trading days. So thanks for giving me the 10 seconds to highlight those disclosures, and I'm sure now we're in a good spot. Now, I think you're right, Rachel. There's something to address here. Rue is also pointing out today is the last day of Q2. Q2 end, finish of a quarter, Rachel, these days can tend to be a little different. And that also implies that as you roll into Q3, there's an opportunity for a different market all of a sudden, even as well. So we have to bear that in mind. We can't just go flatly forward and say, oh, well, what's been happening is going to continue to happen. We know better than that. No market move happens in perpetuity. So as always, proper positioning, planning, etc., all that makes sense. But Rachel, I'm always led to believe, or led back to the reminder that I've had in my head for a very, very, very long time, and that is that the market doesn't really treat the majority of participants well. And what I mean is the market has a habit of confusing the majority often, right? And when things start to lead one way too far, whether that's too optimistic or too bearish, then the market tends to kind of do the opposite. That's not uncommon, is it, Rachel?
No, not at all. And that's honestly like one of my favorite quotes about the market, is that it's set there to fool the largest amount of participants. So when the headlines and the tweets and everything out there in the news is telling you that it's the end of the world, that is probably a time where you could consider being a contrarian in that case, when sentiment becomes so one-sided and so driven by a certain narrative. So I mean, to your point, like, we really have to stick to our plans as traders. We have to take the emotional nature out of it. News is noise. We have to continuously remind ourselves that, because I've been a victim to that as well. And we just have to remember that price and narrative tell two different stories, and we need to know the one to follow, which is
And Rachel, honestly, everybody knows what's coming next. My answer is always going to be the same. Look, if you are one of those individuals who is uncomfortable at these upper levels, is uncomfortable managing profitable positions, wanting to capitalize, then go with what does you, gives you the best comfort, right? Take steps to give you the greatest amount of comfort to stay invested with whatever portion you are comfortable with. You don't have to take what our conversation is highlighting as explicitly valid for you. So what I'm getting at is everyone's in trading process and comfort with the market. We are all vastly different. You should always be putting yourself in a position of your own comfort. And I think that's the hardest thing to get to. We tend to be paying too much attention to those external forces, that noise that Rachel just mentioned of the market on a day-to-day basis. And that noise can lead you to making poor decisions. And my encouragement is to make as good a decision as you can. Ultimately, though, that comes down to your approach and your tolerance for risk and the way you like to go about things. So, okay, I think we've covered the look at the NDX and again the consistency between the two, the NDX and the SPX. And Rachel, looks like we are finally potentially, are we getting the breakout here in the Russell? We have been talking about the need to kind of get this thing through that 200-day moving average. We tried on Friday. You can see we have a bit of a spinning top or a doji on Friday. Kind of implication there is indecision right at resistance, right?
Yep, that's what it's looking like to me because, we saw it break out of that almost inverse head and shoulders type pattern. It went up and touched the 200-day first, pulled back a little bit, back to that 20-day moving average, and then now it's battling with the 200 yet again. So that short little stocky candle there is just showing that amount of indecision. You have that volatility, I guess, from the bulls and the bears just being compressed so tightly. So that tells me that we may see a breakout here soon in one way or another, just because low volatility tends to switch to those higher volatility environments, which like we've talked about, volatility could be good or bad. You could see volatility to the upside, you could see to the downside, but for right now, it looks like indecision here.
Yeah, I think, well, at least for now. The question is, of course, is today going to be a day 1 day above the 200 day? Clearly we were pretty close on Friday. In fact, our close on Friday was 21.72. Our 200 day is 21.74. So we missed it by 2 points, everybody. So if we're going to stick to the letter of the law, today could very well be our first opportunity, as we are above the 200 day right now. We would like to see it close above that in order to maintain. Some of you are good with day one closing above 200 day and calling that confirmatory. Others of you want a second day, maybe even a third day of confirmation, but know what that is for you. The other thing that stands out on this chart, Rachel, is that while the 20-day moving average is nicely upward sloping as well, we do have an RSI that's retreated just to the midpoint. So we're seeing yet again bullish behavior in the RSI as we continue to make these higher lows, and kind of validating, because as we broke that downtrend line, we have not just gone sideways here. We have continued with higher lows into higher highs now today. So I would say some positivity remains here in the Russell. Rachel, you think we got this as largely due to what's going on with yields of late? I noticed that the 10-year has continued to come a little bit lower lately.
Yeah, this is definitely something I'm always watching as well when I'm looking at the small caps, because they're so closely linked as far as what's going to drive that outperformance possibly in small caps is any type of rate trend or rate decision coming a little bit lower. So we're seeing in the short term, it looks like rates, we're seeing a little bit of a golden cross on the shorter term today, actually, the 20 crossing below the 50-day. And then we've seen 3 consecutive days now, obviously not 3 consecutive closes yet, below its 200-day moving average. So that's telling me that rates may be kind of pulling back here, maybe weakening a little bit, which may give a little bit more strength to the small cap, be the catalyst for it to really break out and take charge higher.
Yeah, entirely possible. If we continue to see the yields dropping, it's going to continue to buoy the Russell in all likelihood. And I can't say definitively, as we know, but that would be a very logical relationship to witness over the coming weeks if that's what we see out of the 10-year. The other thing that stands out here, Rachel, is the lift in the VIX. It's not a huge move. It is up 6%. But as it relates to this move, I mean, we can get back to Rue's comment earlier about the last trading day of Q2 heading into Q3. It's not uncommon for traders to start protecting and positioning ahead of that shift to the new quarter, as well as the fact that we've got a really short week here this week, right? We've got a abbreviated day on Thursday, no market on Friday, et cetera. So we got a lot of things that we need to at least be thinking about here.
Definitely. I think one of the other things too that investors can look at, and you can even do this straight within Thinkorswim, is looking at seasonality. You can kind of look at, I mean, use it as a guideline, not as an actual strategy, so to speak, because it's not a guarantee. This is not going to tell you that it's always going to happen. But thank you for bringing up the chart, Kevin.
I'm here to help out, Rachel. You guys, this is a great example, though. This is why I bring Rachel on, everybody, is because she brings charts like this, and she wanted to speak to this one. So please give us the conversation around the seasonality viewpoint here.
Awesome. Thank you. Yeah, just like I said, I mean, I switched to one of these charts within Thinkorswim. We have different seasonality versions, but I always like to take a little track of where we're looking at now. And so right now, with that gray highlighted line in the middle, we can see that S&P 500 performance thus far is in blue. The 20-year average is in red. And it looks like right now we're kind of in that possibly starting a seasonal lull this week before seasonally the market just continuing on higher. Now, like I said before, seasonality is not a guarantee. It is not a strategy, but it's always nice to kind of take a look at history to see if it can repeat or rhyme. But that just kind of shows where we're at quarter end, what could possibly happen going into this summer as folks kind of step away, take vacation, and we're at that seasonal point.
Yeah, exactly. Obviously, of all viewpoints, seasonality, none of these are going to work every time, as we know, but it is notable that historically it's done well. You know, these types of data points, though, are anything but perfect, and everybody knows that. I hope that's the reminder we want to leave you with, at least, is, yeah, it does feel like there's a potential for continuation of what we've been getting, but that doesn't mean anything is going to line up perfectly. So always make sure you're paying attention. Just another piece of potential reasoning behind your own the own way you're managing things, obviously. So. Okay, Rachel, after taking a look here, how about some sector stuff? Anything specific you've been watching on sectors that maybe caught your eye here this morning? Obviously, I could go through some leadership, but I thought I'd give you the first opportunity here. What are you thinking about?
Of course. So the first thing that catches my eye is obviously information technology continuing to make new highs. So that's what been watching, and today yet again, I mean, even momentum confirming it as well, reaching 75 on the RSI. Wow. So yeah, we're having we just saw that breakaway gap that occurred back last week. I know you and I were kind of sharing charts back and forth, but that breakaway gap we saw where price just took off, gapped above that previous resistance in technology, and hasn't looked back yet. So that's the one sector, couple notable things that I've noticed. And then obviously that golden cross that's taking place in the sector, as well as what we saw in the index too, which is what's heavily weighted in tech.
Yep. I mean, what are you going to say about a group that just continues to push higher, new highs, RSI validation, consolidations leading to new quick trends? It's following technical analysis 101 stuff. Not to say that it will guarantee a continuation, and yet the 20-day rising moving average getting into that 4750 level, that becomes an area of horizontal support, a potential area for traders who maybe are a little more cautious on this breakout. That becomes a spot once tested and held where they might then look to expose money here. So a confirmation of support at 47.50 might be a spot where we see more money coming into tech. That has been a great breakout in the last 5 sessions, obviously, after a 2-week consolidation. Just the reminder again, Rachel, is if you watch the market consistently and if you pay attention to candlesticks, you can learn quite a bit just about watching 2-week consolidations followed by a breakout or a pullback to a major moving average. All of that stuff just seems to work consistently of late. Now, what we often say, Rach, we're going to keep working with it until it doesn't. We know it will change. Yep. There will be a time when that changes, but right now it hasn't hit yet. So the one, of course, I'm watching today is the financials, giving us some great leadership. A couple of you called this out already, right, Dragon Rider? I see you here. Yeah, here we go. We have been in a bit of a bumpy consolidation, a bit of a choppy move here in financials, but I think you're seeing a lot of optimism. And Rachel, most notably, I think it was this move here. I'm going to just actually duplicate this line and just redraw it briefly. But it was this break of that I think stood out here over the last week now, as we are seeing we are really, really close to new highs in this sector industry, in this group specifically, excuse me.
It's funny that we called out that in the chat, and then you mentioned that as the next one, because that is definitely the next one I'm watching, because the first thing I did when I looked at this chart was I immediately switched it to a line style chart. And you can see, I mean, we're obviously nowhere near the close today, but if you switch it to a line style chart, you can see as of right now, we're making new all-time highs on that quote unquote closing basis in financials. So I think that's something that's notable as well if that strength continues throughout the day. But this is another one of those sectors where we may see, obviously, like we've seen a broadening participation, we've seen rotation into some of these other sectors that could possibly take the lead and step in here too as well.
Yep. Yeah, good call on that line chart, because you're right. You can see how the closing values, we've just kind of hit our head on that 866 and we're already through that. So on an intraday, very early in the morning intraday, nonetheless, still a good look from that standpoint here. So, all right, after financials, all right, I'm tossing it right back to you, Rach. How about your next one?
Ooh, let's look at consumer discretionary real quick.
Okay, nothing wrong with that. Oops, that's the wrong consumer. There we go. All right, this is interesting here. Let me remove my line. So a little bit of consolidation, but was Friday a sufficient move for a potential breakout?
That's what I'm looking at as well, because, I mean, it depends on your rules. Like we talked about before, we had one close above resistance, and we'll have to see where we close at today. I know you like to use your Horner rule, 3 closes above, but the fact that this is the consumer discretionary is one of the sectors I'm obviously always watching, because it's more of the cyclical type of sectors, and it's lagged a little bit in this case behind like tech and financials, industrial, some of those ones that have led this latest run. But right now it's looking like it does want to break out of this little box pattern on its way to recovery. But is there anything that you're seeing here that's different?
No, I don't think I'm seeing a whole lot different. I do want to just reiterate the thought of the 3 closes, really as a reminder. It's not the encouragement to look for 3 closes. It's the encouragement to have, when I say 3 closes above resistance. It's the encouragement to have something that you deem to be confirmation for a trend, right? For a breakout or a breakdown, you want to use a breakout through a level that is, if it's intraday, maybe it's like 1% or 2%, or if it's over multiple days, you want to see 2 days in a row closing above a level, or maybe 3. The point isn't to use numbers that I'm spouting off, but rather to define your own confirmation more than anything else. Ultimately, that's the step we would encourage you to take here, so that you know how to base those decisions in the moment. It should make it really easy when the step happens. When the price breaks through a certain level, you say, well, I told myself if it was 2% through resistance, I was going to be a buyer. It's intraday, it's 2% through resistance. I've got good volume, et cetera. then maybe you have the comfort to take your position. The point is, you want to make your decision making in the moment easy. And the best way I've found to do that is to lay it all out, right? Build your playbook and give yourself something to refer to. So yeah, I'm seeing the same things, Rachel. And the hope here would be, if you're watching the breakout in discretionaries, that you're going to get a little bit of a trend from here. And you'd like to see that 20-day moving average start to trend upward again. You can see how it flattened out quite a bit here in the last week plus, as we really have gone nowhere prior to Friday. So that seems a little bit notable. The last one that I think we should check is communications. You know, we're going to basically hit on these ones that have been leading along the way, Rachel, and there's nothing wrong with that. Trading and working with the groups that are providing leadership can be an effective way just to trade the markets. You don't have to fight by trading maybe what you think you know best. If you're finding that there's other areas of the market are really, really working well, a lot of traders go where the opportunities are, Rachel. They try not to stay, mired in the process if their process isn't working. So communications looking a lot like how the tech group, has looked lately too.
Yeah, definitely. I mean, communications is another one of those. It looks like the start of what we saw with the tech sector, where we had a breakaway gap above resistance. So we'll have to see if that gap holds, but I mean, momentum looks like it's confirming right now. We're seeing overbought levels in the RSI. This chart looks very similar to industrials as well. That continues to make new highs. So we're seeing that rotation taking place. And we know that in different cycles of a bull market, I mean, rotation is the lifeblood of it. So we're going to continue to rotation into some of these areas, which will give others the time to play catch up. But like you said, for those of you that are looking for outperformance or some alpha, you'd probably be looking in some of those areas that are breaking to new highs and are outperforming on an absolute or relative basis.
Mm-hmm. I like that comment too. As always, we have a lot of opportunity at our fingertips, and especially in a bull market, you have a lot of opportunities, but not all of them are created equal, of course. And so definitely does some a service to us as traders to spend some time determining rather which groups are the ones we're going to want to be paying closer attention to. Okay, Rachel, we've got a couple of stocks in the news this morning that I thought we could hit on that are not just good pieces of information that traders should know about, but also have some pretty notable charts. What do you say we take a look at Oracle this morning? Oracle was upgraded at Stifel today to buy, and done so on sustainable cloud acceleration. Additionally, applied a new price target to Oracle here, up from 180 a share, now at 250. And the quote is that recent dramatic step up in their CapEx and remaining performance obligation gains support management's gains and supports management's cloud growth expectations moving forward. So look, Rachel, this was a good-looking chart heading into today. You had a bit of a pretty clear bull flag in here. I'll draw it in for everybody, but breaking a bull flag is certainly a continuation move here.
Definitely. That was the first thing that caught my eye, that flag or pennant pattern. And traders that are looking at this breakout, I mean, we talk about here all the time that patterns are no guarantees, but if traders are trading this type of pattern, they're going to be looking at the distance of that flagpole added to that breakout level for their price target. So while that seems a little lofty since we're just making those new all-time highs, we're still seeing momentum confirm it. Traders will possibly be looking to target some of those areas if they're being a little bit more aggressive. The only thing that stands out to me here is just kind of, I want to see volume also kind of participate in that move as well. Looking at the end of the day today, just to see that extra confirmation here with that move.
Yeah, I think traders would always love the add of volume here supporting the price move, of course. But look at how big the volume was back here in the window of the flag build. I mean, it wasn't like traders were diving out here. I think we saw people stepping in the middle of the flag build here. Normally, you see that kind of result in traders were already in it, and then they allow the price to consolidate, and what happens is volume gets sucked out of the position. In this case, though, it feels like there have been traders who stepped in here on the move higher in anticipation of a continuation of the breakout, and that's a little bit less common to see that kind of volume in the portion of the cloth being built that we've seen in the last, say, 7-8 sessions there, Rachel.
Agreed. That's what I am noticing as well. So I think that is something that is notable. I think this breakaway gap is surely something that traders will be watching. And then, like I said, I mean, the bullish evidence is existing here. If we do see a little bit of a pullback to that prior resistance, it may give traders that other type of entry as well.
Absolutely true. Now, one that we're going to bring up, I think I talked a little bit about this late last week, but this next position is really intriguing for the chart, everybody. The chart stands out for a number of reasons. We're going to look at it on the daily to start us off, and it's going to look a little less excitable, to be honest, outside of the fact that we see price action through a white line here. The white line will be more clearly defined momentarily, but news on Disney today. Disney was upgraded to buy from hold at Jefferies. Analysts at Jefferies upgrading with a price target of 144, up from 100. That is a very nice shift. The firm now sees limited risk of a second half in 2025 parks slowdown. And so that's a positive, obviously. A less likely slowdown is how I would read that. And macro factors as well, more positive on their 2026 cruise upside additionally. So this not negatives here. Rachel, I'm going to kick this to the weekly chart, and I'm going to let you talk about it because this is a pretty cool look.
Definitely. It's funny because we actually covered this morning on Morning Movers on the Schwab Network as well. And I took this same exact process. I first started with the yearly chart, then I went to the weekly chart to just zoom out, get a better look. But that daily chart, like you said, I mean, all of the evidence that's stacking up on the daily is all bullish. There is nothing bearish that I saw there. So that's why I had to take a step back and look at that longer term. And obviously, Disney has been one of those names that, especially over the last 5 years, they've definitely gotten a little bit too into the political sphere. And that's kind of, again, where we talk about how price and sentiment kind of works together, where just sentiment really drove that price in that case. But ever since, in the last few years, I mean, this is nearly a 3-year basing pattern, rectangular bottoming pattern that's occurring. And that's, like you showed, I mean, really a $40 range. So if we see a breakout here and this holds.
Look for validation. This is a weekly, so traders might want to see 2-3 weeks in a row of clearing and maintaining the 122 level, everybody. That would be a potential confirmatory piece. And yeah, you're right, Rachel. The positivity stacks favorably on the bull side, much more so than the bear side here. But that certainly doesn't mean we couldn't be rejected even still. Reminder that, hey, this has been a good push. We have seen 50% rally from the low on April 7th. So it is by no means a weak push, but it doesn't mean that it has to keep going. And so have to bring that up. And then, of course, I want to remind you all that, Rachel and I appear periodically there on the Schwab Network, but that is a third-party company. Remember, that is a separate but affiliated company owned by the Charles Schwab Media Group. Another opportunity for more education for you all, though, of course. So something you can always keep in mind here. So, Rachel, if a trader were so inclined here, a couple of the things that stand out, right? The range that we've traded in and the speed with which we have pushed from the bottom of the range to the top of the range. Certainly, if you were just simply trading this for that type of a move, then a trader at resistance perhaps considers taking a little bit of profits here just simply because you are at resistance. And again, the reminder is if you're a seller at resistance, Rachel, it's because you're taking on profits most likely. That's not a negative because the barrier to re-entry, what if the breakout gains legs? Is there anything keeping a trader from buying back shares that they may have sold a little bit early just for their own comfort?
No, not at all. And that may be something that we typically see as well. So like if we do have a pullback, probably where traders will be targeting, at least on the weekly basis, to actually enter the trade, would be that gap that we saw, and it's right around that 40-period simple moving average as well. So if we do, like you said, maybe have a needed pullback because of the strength that we've seen into this trend, for those that are wanting to enter into this trade, they may be looking for that entry a little bit lower on that pullback of that gap. But what I always like to do too with this, when looking for the breakouts like we've done on every chart, is throwing up the momentum or the RSI to even see if there's any bit of divergences there. And if there's a divergence on the weekly, because I know this is the daily.
Yeah, let's throw back. I think oops, I'm sorry, everybody. Here, I went to the wrong chart, Rachel, my fault. Let me throw up the, I think I got an RSI in here for you. There we go.
It's a red warning. It's okay.
That's all right. I appreciate your understanding. Yeah. Okay. So on the weekly, you'd like to see that RSI move into overbought conditions is what you're saying, correct?
Yes, exactly. Because the prior time that it reached overbought levels, it actually made a lower high than what it's making now. So the weekly momentum is showing that there may be a little bit of a bearish divergence here. So again, to your point, that wouldn't be a surprise if we saw some folks kind of take profit here above resistance, now support or
Sure.
new support.
You know, as always, regardless of how you feel about what you're seeing in terms of price action, you can see reasons for traders to take step A and manage the trade by taking profits at resistance. You can see reasons to sticking with the trade and just simply allowing yourself to maintain as long as possible, maybe raising your exit strategies along the way. There's a number of key ways to go about this. You don't have to do, what your neighbor next door might be thinking about. You should absolutely have an approach that works for you individually. Rachel, the last thing I thought we could get to real quickly was just, I noticed there was an update on Coinbase, had a price target raise at Bank of America, and the chart on that one has been pretty impressive in the last week here as it has exploded after breaking a downtrend line. They raised the price target at Bank of America to $397. Seems not a little lofty anymore. I mean, if we'd have talked about it 3 weeks ago, it might have felt a little lofty, but goodness, it's been an explosive move to the upside here.
Oh yeah, Coinbase is definitely another one of those ones that I like to look on a couple different time frames, because I mean, right now we had, like you said, you couldn't put it better, an explosive move to the upside. It almost looks like the start of a possible flag pattern taking place, because it was nearly, I mean, a parabolic move straight up. So price is probably going to take a few days or so to just kind of digest some of those gains, may consolidate. Obviously, no guarantees, but if you throw up the max weekly chart and put that on a line chart for me, Kevin, you're going to see that we're at such an interesting level, and this is what I'm watching. So really above, I think it's that 342 was the level of support, but really this is a long-term, very bullish type of pattern taking place, where I always like to say the bigger the base, the higher in space. So.
Okay. Interesting. Yeah, I mean, look, when you take out areas of former resistance and you've got blue sky up above, it's pretty hard to start targeting resistance. It definitely becomes a bit of a challenge, but it's been a big move here, peak to trough and then through the peak again. Pretty incredible maneuver, no doubt about it. So that seemed notable, even if Bank of America's price target bump seems a little bit behind, but we know what price targets are. They're not as they're far from consistent or far from locks to be achieved, as we know. So nonetheless, a very interesting look there, Rachel. We've covered quite a bit today. I want to thank all of our viewers for sticking with us and dealing with my limited technology issues. I appreciate you all staying with us there this morning, everyone. Of course, I love having Rachel on. I know all of you do too. Your commentary is so on the money with what she brings to the table. So, Rachel, thanks for sharing some charts with me today. Thanks for sharing your thoughts and your insights with all our viewers.
Thank you for having me, and thank you all for watching. I really enjoy this every Monday that I'm able to join with you, Kevin.
Yeah, I love having you. And thanks to all of you for being here, everybody. It is Monday. Always more to come from us. Thanks to Mike Fairborn in the chat. Hit us up on X, Mike Fairborn CS, Kevin Horner CS. We are going to get a replay of this out into the YouTube algorithm for you. If you'd like today's discussion, hit that thumbs up button down below for us. That'll lend us a hand as well. So hope you all have a fantastic Monday, everyone. We look forward to seeing you again real soon.